Good morning, everyone. Welcome to the second day of India Digital Summit. We are going to start in a few minutes. The speakers have already arrived. And to start the day, I would like to thank all of you for being present here. And I definitely would like to mention our partners without whom this summit would have not been this successful. Our associate partners are Google and MessageBird. Growth partner, Paytm Ads. Lanyard partner is Kalera. Conversation media partner is Bobble AI. Agenda partner, Disney Star. Track partner, TCI. Digital transformation partner, Accenture India. Digital media partner, Jagran New Media. Silver partners are Clevertab and AWS. Bronze partners are Hexawebony, Mool.one, Exotel, Notify Visitors, PacePrint, and True Balance. And our conversation partner is Value First. We are going to start our next session. The topic would be the changing face of digital lending and how fintechs have revolutionized debt collection in India. The session would be moderated by Mr. Gaurav Hinduja from Axio, and our honorable panelists are Mr. Anant Deshpande from FinBox, Mr. Sabyasachi Senapati from BharatPe, Mr. Satyam Kumar, Loan Tap, Mr. Suchir Bhatnagar, AWS, Mr. Sandeep Ghule from Credilio.
Okay, good morning everyone, and thank you for being here. Thank you IAMAI for allowing us to do this panel and allowing me to moderate it. We have a very interesting lineup of speakers today from a varied backgrounds of SaaS, cloud, 2-3 different types of lenders. And we all know that FinTech has been growing fairly rapidly over the last 2-3 years, interesting models, different customer segments that we are targeting. But the real question is, how are the NPAs looking? How are collections looking? And so we're going to spend most of the time today talking about debt management, collections, recovery, and a lot of the innovations that have gone on in the space and how we are looking forward for the next 12 to 18 months on that piece. I'll ask a few questions, but then very quickly open it up to the audience. So please, if you all have any questions, let's try to keep this as interactive as possible. So if we can just start first with each of you all just giving us your background, company background very quickly, what do you all do? And then we'll go into questions. So Sandeep, can we start with you?
Thanks, Gaurav. Hey guys, happy to be here. It's a privilege, in the August company. We are a very young firm. We've set up an assisted digital lending platform, which actually leverages the DSA channels and agents who are there set up across the country and giving them a marketplace platform to do all kinds of lending products. And right from origination now to moving on to the debt collection, that's how we are moving.
Hi everyone. This is Anant. I am one of the co-founders of FinBox. FinBox is a 5.5-year-old credit intelligence and credit infrastructure SaaS company. We've been helping lenders, I think, right across this panel, to supercharge their underwriting, collections, cross-selling, using our proprietary data products, credit scores, and our APIs and SDKs to power lending on various platforms. So I'm really happy to be here, looking forward to the interaction. Thanks.
Thanks, Anand.
Good afternoon, everyone. I'm Suchir, and I work with AWS. So I lead the business development for the FinTech startups. Incidentally, my previous 2 companies are again on the panel here. So previously, I was with BharatPe, and in my last role, I was working very closely with Satyam sir. Pleasure to be here.
Suchir, do you have problems collecting AWS bills from FinTech companies?
Not as of now, but we'll get them financed.
Sure.
Hi. Hi everyone, my name is Sabyasachi. Uh, I lead banking and few of the initiatives at BharatPe. Now, the the connection to digital lending is, while our core product is a QR payment stack, and we are today active across 3 million plus merchants who are active on a sort of weekly, monthly basis. We use the transaction data on our platform to sort of help underwrite those merchants and facilitate small ticket size loans to them. So we'll talk more about this during the discussion today.
Good afternoon, everyone. I'm Satyam, and I run a company called LoanTap. We provide retail lending, both software stack as well as the product itself. So we have an NBFC for product creation opportunity, and we act as a platform wherever people have an ambition to do a digital lending, new age lending, or a new age data underwriting. So that's what we do at a LoanTap.
Okay, thank you everyone for that, and let's get started. So maybe we start with you, Satyam and Sandeep. Honestly, fintechs have done a lot of good jobs over the last few years in acquisitions, digitizing the process, making the underwriting of loans easy, making the process easier. Have we done a good job in digitizing the collections process?
So, two things. One was honestly, and the second Satyam. So, as far as the process itself, if we go by the definition of the question, the process itself, has the process been digitized, automated? The answer is emphatic yes. The entire end-to-end collection ecosystem is digitized, whether it's a data movement, whether it's a customer relationship engagement, and all. And the biggest testimony to digitization, or our ability to have a multi-layered connected relationship with the customer, was during the COVID period. The largest of the network consumer lending companies saw portfolio under moratorium of about 27%. Okay, most of the fintechs were much below that. We were at about 14% when the customer request was for the portfolio under moratorium. Similarly, if you'll see a customer's complaint during the time in terms of how we handled moratorium requests, restructuring requests, and anything else, you will see the least number of a customer when it comes to a fintech vis-a-vis any of the banking system. So if we see that when the customer was at the weakest point of their time, and that's where the collection really steps in, engages, did fintechs fared better than a best of the tech stack in the lending consumer lending system? The answer is yes, and so we engage we had all the relevant data for the customers to re-engage with them without reaching office, pushing teams, or pushing people into the societies or the houses and all during the COVID time, and we did it. So that was an example how the whole automation process and all worked. But there's much to be desired as far as the collection itself is concerned. Is it throwing the relevant intelligence beyond the basic algos or a rule of bucketing, transferring a case from one person to another person? Is it going beyond that? The answer is no. And the prime reason for that is that if we see while in a banking system we have a lot of lending data, most of the data are both. There is a restriction on a data, and the second is that the behavioral data is less and less there. It is more financial data. EMI time pe gaya, nahi gaya, income kitna tha, bureau kitna hai. These are like hard-coded financial data. The financial data does not help when it comes to a collection. Collection happens when in not a normal situation. It happens in an abnormal situation. There could be a medical emergency in a customer's house. There could be a temporary or a long-term cash flow problem. Those kind of situation. The banking data does not addresses it. These are the data which was picked up in the last 5 to 6 years when fintech-based lending happened across the spectrum of MSME to salaried. And so now we have our data, and I hope that in the next 1 to 2 years you will start seeing proactive collection management system beyond the rule-based collection management system. So first part, automation, done, dusted, we are there. The second part, is it more than that? Not yet.
Fair. So on the more than that, Sabya, you all have an interesting, with the QR codes, you have a point of sale for the merchants. How have you all envisioned using that? How are you all currently using that when it comes to kind of repayments and collections? And has that made the entire lending process easier, at least from a collections and keeping the NPS low?
Yeah.
So I think for us, the underwriting and the collections are to large extent linked, right? So unlike what Satyam was mentioning, right? So you underwrite using financial data, but your collection is completely different. The events of life are not captured, right? So for us, the premise of lending is, we're lending to this is a small merchant, a kirana store, right? Who would need a small ticket size loan, largely for financing the business, right? Obviously, in that kind of setup, very different to separate business from personal sort of needs. So the way we are able to underwrite is we have a QR solution where there is a daily flow of transactions. Once a merchant has a certain vintage on a platform, we are able to see what is the transaction history, what is the range of transaction, what is the peak, et cetera, right? And in a certain period of time, we are able to confidently, or with a certain degree of confidence, underwrite the merchant that if this is a transaction history on a platform, this is the kind of ticket size the merchant can be lent to, right? So I think that's one part. The second part is the collection happens through the same QR code. So someone who is, let's say, collects money, let's say 2,000 rupees is the daily transaction. A part of that 2,000, let's say 500, whatever that number is, that goes as part of a daily collection. So we have a model which is a EDI model, not a EMI model. So the collections happens in sachets, right? So the loan is dispersed, let's say there's a 6-month kind of a ticket size loan, but the collection happens on a daily basis in a very small amount, right? So by linking both the collection as well as the underwriting to the transaction value on a platform, one is obviously we are able to underwrite better. I think that's one. Second is, the collection, the regular collection becomes completely seamless and digital. There is no manual aspect there. The collection happens as long as the QR code is active, the shop is up and running, business is happening, the collection happens.
But does that mean if a person kind of keeps the QR code on the side, is there like an intent issue there, and how do you all actually collect from those, even if that's 2%, 3% of the cases?
Yeah. So, say like I said, 95% of the cases, cost-effective, seamless collection. The less than 5% where this happens, there could be two, right? There could be an intent issue, or there could be like, for instance, especially when we started lending immediately after that COVID hit, right? And we went through the whole phase, right? So there, I think we still need to transcend digital, right? We have a large sort of feet on street which go and onboard merchants. Now, the feet on street needs to be activated to see what is the issue with the QR code. It could be an issue that the QR code is not working, there is a technical issue, or there could be an intent issue. I think it's a combination of using the field sales force plus telecalling where we try to figure that out. Right? But I think that's the 3 or 4% where truly we need to figure out what is the right kind of solution.
We all live between the 3 and 4% only, right? that is life or death for us. Anant, if I can bring you in, right? You do a lot of SaaS products for banks, NBFCs. You're embedded in a bunch of large ecosystems. How have you and your company played a role when it comes to assisting lenders with collections? Are you any products that have been developed? What is the role that you're actually playing actively there?
Sure. First things first, lending is actually a business of collecting back money. Other than that, I think all of us would really agree, it's easy to give out money, and then all the profit is on paper unless you collect all of that money back. While we are on this topic of, Digital India at 100, let's say we are at 75 years today, 25 years hence, if one has to make a prediction, I'd be very optimistic in saying that, where we would have reached is very close to 100% or maybe 95% financial inclusion, which means there is, 95% of eligible citizens of the country will have access to financial services at a high quality, as well as ease of access. And when that happens, actually from a lending point of view, when you say that almost everyone has access to credit when they need it, what that would automatically mean is the size of the credit will go down, because if you look at the vast population that does not have access to credit today, they do not need like lakhs of rupees of credit. They would need credit of let's say 10,000, 15,000, 20,000. And my fellow panelists are doing a great job. Their companies are doing a great job in bringing both consumers, MSMEs into the financial fold. When the ticket size of the loans will go down, this will also mean that the repayment or the collections that we build have to then be very, very automated, digitized, low cost, seamless, and low cost in a big way. What this would also mean, 95% financial inclusion also means is financial services available across 19,100 odd pin codes of India, which would mean that as a lender you cannot really have human collection force sitting at all pin codes. So the manual intervention has to go down. So to let's say the earlier question also, we haven't, I would say we haven't nailed the collection process as of now today. There's a long way to go, but we've kind of started moving quickly and rapidly increasing our pace in digitizing and making collections more intelligent as of now. The other thing is, to Satyam's point also, there's some, I'd like to differ with the view that, a lot of transactional data or financial data that is available, it is quite predictive of, how an individual or the borrower or an MSME is likely to repay back the loan. And at what point is he able to repay back in case the borrower has defaulted. The good part, and we work with a lot of data with our SaaS products. We are now a specified user. FinBox is a specified user. We have account aggregator partnerships, which gives us access to both bureau information and transactional information from borrowers' bank statements. And both being on an API, we are able to collect this information continuously. So imagine a borrower who's come to take a loan. After you've given the borrower a loan, even during the repayment cycle, of whatever, 3, 6, 9, or even 18 months, whatever is the tenure, there is now access to this information, which is banking transaction information, bureaus, and bureau scrub, continuous information about behavior on bureaus. FinBox also has its proprietary collections as well as underwriting scores built on top of anonymized smartphone data. So when we talk of these three data sources together, they become very, very powerful in terms of being able to predict whether a borrower or a segment of borrowers will hit 30 plus days of delinquency. And if there is a segment, given a segment of borrowers at 30 plus delinquency buckets, what and which specific borrowers are likely to repay back within the next 30 days. So these are the scores that we've built and are now operating at scale, collecting about 10,000 odd crores rupees worth of loans every year. And as we go along, I think, and as our models see multiple credit cycles, they are only going to become stronger and stronger from here. And we imagine a time when lenders will no longer have to depend on a huge collections field force. They would be able to predict with high degree of accuracy as to which part of their portfolio, because out of, let's say, every 100 borrowers, you typically need to pay more, let's say, attention towards, getting repayments done for about 20% of the borrowers, which start getting into delinquent buckets. So we'd be able to predict with a high degree of accuracy which those 20 are. And why are they delinquent? They are delinquent because of either they did not have intent to repay back, which of course has to be quantified during underwriting a lot of times, but no underwriting process could be perfect. So lack of intent, then lack of financial resources, and then over-debtedness. So you've taken a lot, many loans than what you could actually repay back. So we'd be able to quantify and bucketize these and make appropriate actions on top of them. That is what we do.
You should charge your lenders for every manpower saved. You should charge a percentage of that.
Yeah. So our SaaS business model is just evolving as of now, but that's a great idea.
Don't charge us for that. Suchir, so we heard a lot about new data that's coming, the presence of that data. You have a very unique vantage point into the industry. You see everybody's data, you see the volumes of the data. How is AWS engaging with fintech startups in general? But then specifically, is there something that you are thinking around the use of analytics, particularly in collections?
Sure. So thanks for that, Gaurav. AWS does not see your data.
Sure, let's say
the
that.
volume of data. let's put that up front. Secondly, yes, like you said, we are sitting at a very vantage point. It's good to see, what all the fintechs are building. Only request is keep building it on AWS. Okay. See, AWS, how we look at ourselves is not as a cloud provider only, but it is more the services that we can give you. I think already Sabyasachi and Satyam sir have already covered. You see, collections is not something you will always be able to drive. You cannot remove physical leg from collections. It is going to be there. What you can do is you can improve things, right? You can automate things, you can improve it, you can make it more efficient. To give you an example, we are working with a client of ours who is a fintech. They do a lot of lending. They run a very big call center. They have almost 1,000 telecallers. So he told us the biggest problem for me is, to understand what my customer is saying, what my telecallers are speaking to them, right? To even audit that, he would need to hire 10 to 15 people to do that. But today, this is something which technology can solve for you. There is a service in AWS which we call as transcribe. It will take your voice, change it to text. There is another service called comprehend. It will help you to understand what was the sentiment, it will help you to summarize it. So at the end of the day, you don't have to really go and audit 1,000 telecallers. You just have to go through a very summarized version of it. You'll be able to pick out things very fast. Let's say something was wrong in a particular PIN code or something is wrong with a particular agent. So as a cloud provider, what AWS does is helps you to build that infrastructure which can solve your, not solve, but I'll say to automate or to make it more efficient, to make the collection process more efficient. Gaurav, now coming to analytics, again, analytics is something for which, again, we have a lot of solutions. But we always tell people that, don't think about technology. Technology is already there. You think about your business problem. What is the business case that you're trying to solve? Once you understand what is the business case that you're trying to solve, you'll always be able to find some way in technology, to handle it. Like to give an example of machine learning, right? Again, AWS can help you. They will provide you services of machine learning, which will make this process easier for you. But ultimately, you still need to sit down. You need to train the data, right? But probably what was taking you weeks or months before will come down a lot. Because we have great services like there is AutoML, SageMaker, which really helps to reduce this burden of you. So that is where, I think AWS, we like to think ourselves more as a strategic partner rather than just as a vendor for the fintechs.
Oh, that's very interesting. Sandeep, you run a very interesting aggregator model where you work with a lot of DSAs who have constant touch points with the customers. Have you been able to leverage that channel to improve collections and NPAs ultimately, or is the focus purely kind of on sourcing?
So Gaurav, thanks for the question. So if you look at it, our model, we started primarily on the origination side. Okay, so we today work with about approximately 28 to 30 large banks and NBFCs, and primarily we help them source new customers, and that happens on a marketplace kind of a model. And we kind of have just digitized the journeys which used to happen in the erstwhile in a physical manner. So in a very crude manner, you've got a lot of D2C platforms which are doing lending, and we have created an assisted digital platform for it. Now the interesting part is that over a period of last 6 to 12 months, now we are seeing large banks now opening up to the idea that let us not restrict the use of this assistance channel only at the time of origination, but can we actually go in deep through the entire life cycle of the product. So in case of, let's say, credit cards, all of us know that now RBI is very much insisting on getting credit cards activated within 30 days. Otherwise, they want the cards to be shut down. So hitherto in a DSA model or an agent model, where the rule was only till the point of issuance, now we are actually helping the banks to go from issuance to the activation model, because there is a connect which already exists. Why not leverage that connect to get the guy also involved as part of the game? So there is skin in the game for everybody. And there is a pilot that we have started doing with a couple of lenders now in last 6 months to say that how we can actually extend to the debt collection level also. Now see, this works both ways, right? Hitherto, the origination channel did not have access to data. Now, as lenders are now open and they are comfortable to share the data in basis wherever there is a debt collection is to happen, now we are able to leverage our connect with the customer through the assistance agent to go and prompt the customer. Now, the point which Anant was mentioning, if there is no intent to repay, then of course, there is hardly somebody can do anything about it. But as we've realized that there is a lot of effort which can happen from nudging point of view. And plus, if you look at it, the type of agents that we have on a board, they also involve, they're not typically telecallers. They are mostly people who have some connect with agents. There are insurance agents, there are investment agents who have more deep relationship and connect with customers. So at that particular level, you are able to move the needle a little bit. This is of course early days, but now we are saying that typically some of the with large lenders, they are now open to let companies such as ourselves to work as their true partners. So that you start with origination and go all the way to debt collection. The second aspect is also collection of data. See, typically, again, I think all of us know that you always looked at the sales team and the verification team separate because you don't want collusion to happen. You want to keep the sales team and the collections team different because again, you do not, you've seen a lot of frauds happening in the past. But now with the use of tech and use of the data, that you can actually manage the entire life cycle as an extension if you look at a partner to look at in that manner. And which I think is today, the good part is that, and the point which Satyam also mentioned, that financial data is available today, but now we are trying to say that how do we actually capture more behavioral data? How do you also look at the enablers and the impact points and the influencers? And can we actually create the influencers that way? So one of the vision that at Credilio that we have is that we want to create that entire army of people who stand for trust and expertise as far as the entire life chain and the value chain is concerned of lending products.
So just on that, we've all agreed that what tech will enable us to do is make collections more efficient. You can't necessarily completely automate the process and not have either callers or feet on street. So on that, given that a lot of us have kind of collectors, whether it's on the phone or on feet on street, do you all typically outsource it? Do you have folks in-house? Have you seen a difference in quality? Maybe Sabya and you, Satyam, how do you all see this? And also Anant and Sandeep, you all work with a lot of lenders. Have you seen difference in numbers based on the business model of outsourcing versus in-housing?
So from our point of view, what we have seen is, there is always a blend, which is what you want to achieve in terms of optimization. So we work with a combination of an in-house as well as an agency network. What is to be kept in mind is that each of these processes has been, as far as the physical part of the process is concerned, whether it's telecalling or whether it's meeting the customer in person, it has been there in India for ages, and there is a well-documented guideline for that. There is a DRA certification, there is a DRA e-certification for the call center employees and all who has to go and conduct it, including the outsourcing guidelines and all that. Each of the processes, each of the vendor, do they meet that criteria? Are they getting audited and all? Those are of key concern. And as I said that, each of us or, every institution which has a little amount of data also feels that, they will do a lending. So with this kind of a, mindset, how are you protecting your customer? How you're protecting their data, and the whole privacy concerns around those audit requirements becomes more and more stringent. So while yes, we do have those combinations because that's a most efficient combination, because every location your portfolio size doesn't matches the requirement for having an in-house person. And at the same time, the certain processes, even the whole process of handling the legal notices and all, I mean, that's well done by the lawyers and not by any institution or any technical process or automated process for that. So yes, there's a combination, whether you want to call it a legal agency, whether you want to call it as a call center itself as an agency, there is a combination as far as we are concerned.
Sure. Sabya, for you, is the teams mostly in-house?
So I think again it's a mix. See, I think the tougher cases, or let's say the cases which cross a certain DPD, right? I think those are the ones which are outsourced, where clearly there is, intent not to pay, right? And cases beyond a certain reach. I think in-house, there are two parts, I would say. One part is, see, we talked about that 5%, right? So even before we get into collection, the idea is that are we facilitating collection in such a way that we are able to address the near-term problem, right? So one could be, for instance, a QR stack, right? That itself, the shopkeeper, the merchant is facing a certain issue, right? That can be handled centrally. That we can figure out what is the transaction. If, let's say, for a period of 3 days, the transaction is dipped beyond a certain point, then there is clearly an issue, right? And then the FOS or a central team will get into action to figure out what the case is, right? While sales and collection are separate, I think the way we use the feet on street, whose main job is to acquire merchants, is to reactivate the QR codes, like in this case. And reactivation of QR codes either through the FOS or through the central team can address a certain cases. I think only beyond, once we realize, there's nothing much we can do. And often these are the cases where there's the intent to pay or the, shop is shut down, whatever, which is where I think the outsource agencies come into play.
Anant, Sandeep, you all work with different lenders. Have you all seen any difference in the type of model of collections that the banks or the NBFCs, which is probably better, or have that insights helped you all in kind of shaping who are the lenders you all work with, and how do you all kind of see their model impacting you all when it comes to collections?
Right. So while we are a SaaS or the intelligence partner for lenders, we've had, while working with lenders, we've had a very close view of, how lenders have approached collections. Traditionally, lenders would let's say, have, few serviceability pin codes, and they would have their own collections team who would service those pin codes. And, there would be, let's say, for every, successful lender, for sure, there would be a collections manager who's paranoid about, ensuring that, whatever EMIs are due on a given date, let's say 95% are there just, within 2 days of due date, and then hopefully, another 3-4% are there over the next 30 to 60 days, so that the NPAs remain below 3%. To do this, one model is to have, of course, all the collections agents on your own team, where there is, of course, a high degree of control over what the collection process is looking like, what is the communication going out, what is the cadence, so on and so forth. But with any lending business, there will be a part of the portfolio that will go beyond 60 days of due or 90 days of due, which makes it very difficult for a collections team which has to concentrate its efforts on to certain areas to kind of continue to do that. So there is an outsourcing that most of our lender partners do, where they outsource some of these cases, the difficult ones. And beyond that, even ARCs come into the picture, asset reconstruction companies that would buy the NPA accounts at a cheaper rate and try to salvage value from it. But of late, especially post-COVID, we've see changes coming in, where of course, having a large collections team is not asset light, right? There's a lot of cost associated with it. So to cut these costs, make these, variable in nature based on, however much the lenders expand. So have the ability to expand or contract the team or the effort. We've seen lenders choose outsourcing as, in a bigger and bigger way. This has of course led to lowering of costs, but the control is also lower, and therefore the efficacy that we've heard is relatively lower, but still this model continues to be preferred. We have to see how let's say the regulations play out, the compliance requirements play out, and frankly, this is a great opportunity for some of these players who operate in the collection space, whether it's field collections or calling. If they can stick to with the compliance and privacy issues around data sharing, then they have a good business model at hand as well. And overall, it increases the number of stakeholders who are operating in the business, and this could make for a very good overall efficient business model as well.
Any questions before I can keep going? But any questions? Yes, please.
Embedding insurance, right? But when we look at conversations with fintechs, that approach on embedded insurance has, that has not been very clear. So just interesting to understand from the panel.
See, your question is how come fintechs have not embedded insurance in the products?
Yeah, I mean, it's not as uniform as you see MFIs or NBFCs embedding it as a process.
So what is this? Credit default insurance, term life, like is there?
Yeah, credit default, loan protection.
Loan protection.
So I think Gaurav can only answer that, but is it embedded? The answer is yes, it's embedded. It's not as if it's not embedded. And a reverse question there is that we have seen a very low claim ratio. And particularly it was evident in COVID. So, I mean, we have been working with leading insurance providers. We see a very poor claim settlement ratio there.
I think honestly, a lot of us fintechs do it, but it's seen more as a revenue enhancer, to be honest, rather than actually, helping and aiding in collections of NPA accounts. That's typically the view that most fintechs have taken. Any other questions? Yes, please.
See, I think that was spoken in the panel that location was an important aspect when we look at lending or collections for that matter. And Anant, this question is for you. Is it that in some ways we are able to see that we can actually lend looking at the customer rather than at the location, and say that this customer has got a good credit history, or you believe that the customer is good enough to lend? And can we have these business models where collection can happen in a way digitally rather than having outsource or having field on this?
So I think the question is, can you have a collections model irrespective of PIN codes? Please go ahead, Sandeep.
So, the clear answer to that question is yes. There is a lot of work happening actually in that area. So, in fact, couple of banks that we work with, they now have PIN codes which are only digital lending PIN codes, right? And these are the PIN codes where exactly what you're saying is happening. So there are separate rule engines now at work. There are separate amounts of which have been identified, and that is where the entire sourcing as well as collections, the entire model is happening only to digital ways.
Is that because they're too scared to go to the PIN codes?
No. The point is that is how they are trying to expand beyond the locations where they have the physical team in place to be able to collect. Because traditionally we always looked at saying that, okay, I have got people or collection mechanism in X thousand PIN codes, and let me, for example, restrict only to that. But how can I go beyond that? It's happening today, but at least where we are seeing from, that data is, I think, still to come out, which is statistically significant and which can then be used probably for doing large ticket lending. But we clearly see that thought is in that direction, and again, it is important, from even from analytics point of view, for banks to have their scorecard specifically, proven for that particular segment, which I think will take some time for, few months of data to get collated and then, going through it.
I think the answer is definitely yes, but there are still prevalent negative PIN codes in this country that nobody wants to lend to, which I think we as FinTech should obviously kind of make the leap and ignore the PIN code and go after the credit of the particular borrower.
Yeah, and I think you're right, Gaurav. Most of the blacklisting or rejections, location-based rejections, are at PIN code level as of today. But if you imagine, one PIN code itself is a large area, in some square kilometers at least, where there'll be good population, perhaps in lower concentration, and bad population. So our lenders somehow are leaving some value on the table also, and of course this from a borrower perspective leads to lack of access to financial services if they are a part of that blacklisted PIN code. Location data here would let's say play a pivotal role if that is made available at a very granular level, and with all originations happening via smartphone or availability of a smartphone with the borrower gives lenders ability to access point precise location, and then therefore lenders are able to build these again blacklisted locations, but not at a PIN code level, but maybe 100 meter cross 100 meter area. This is totally possible. I think one point, and as a FinTech SaaS or a B2B FinTech SaaS, we also have built these models, and lenders have been using, our lender partners have been using these models. Of course, there is now a bit of a hiccup that has come up after the digital lending guidelines, where more and more lenders now have interpreted that location information of a borrower is available at the point of underwriting, but no longer available post that. And from a collections use case point of view, this insight is of course very necessary, which is to say where the borrower is located, let's say 60 days, 90 days after the loan has been disbursed. And this is where currently at least we see a challenge, and we hope that in some form or the other, location data is available of at least the bad portfolio, so that it can be made to put to good use for collections purposes.
Suchir, this could be an interesting consulting assignment for you guys as you all think about presence and data in PIN codes, right? Because as lenders, we don't have global macro level data, right? And obviously this is something that you all can think about engaging with
So
FinTech.
we do have some companies at a global level, who are working on this kind of algorithms where, like what we call as polygon mapping, where you have actually tried to break an area into polygons, right? And you can give very precisely whether should I give a loan here or not. Again, Anant, on your point, I think there's a data privacy issue here, right? Because I cannot be sharing my location with you if I have taken a loan from you. Maybe that is something which needs to be seen, right? Sure. How much of our privacy are we willing to give up just to take a loan?
Sure. Yes, please.
Hi, my name is Amit. First of all, thank you so much, panel members, for sharing such wonderful insights. My question is related to, like you said, there are certain PIN codes which carry a negative connotations about, lending in particular, or even collections for that matter. My question is, like, similar to the PIN codes, there are certain industries. For example, construction, real estate is one industry where a lot of lending is not happening. So from a lending and as well as from a collections point of view, what is your view for a FinTech which, let's say, is trying to enter into this space, into the lending for, let's say, real estate and construction finance? What should be the right strategy, both from a collections point of view as well as, maybe we're not touching upon lending, so I'll keep that aside, but from a collections point of view?
So I'm not sure any of us do real estate lending here, but maybe Sabya, you have a view of different merchants, and how do you all think about industry specific merchants, or Satyam? How do you all think about industry and
I'll touch upon, and then of course I'll give it to Sabi. So, one of the core stuff in real estate is the nature of player. I mean, any lending that you do is that you look at the social fabric of the participants in that ecosystem. Okay,
Right.
and you have to figure out how are you going to attend to that social fabric which operates in the real estate. In any lending, one of the thumb rule is that if you are able to do a end use monitoring, then you are home. Okay, so even if you are I don't want to get into the detail of the product and all, but if you can just hold on to end use restrictions, you will be better off.
So again, real estate lending, that's a different ball game altogether. So, but just touching upon this and the previous question, see again, when we look at merchants, there are obviously PIN codes where we don't want to lend to, and I'm assuming a lot of these PIN codes are common across. It's not just lending, you generally don't want to do business in these PIN codes. What we also try to do is, within PIN codes, get a little bit of a granular view. Because see, if you have a good penetration in a certain market or locality, we have a certain base of merchants, we know what is the kind of average transaction or daily transactions the merchants are doing in that locality, right? So we can have a locality view where we say, these are the localities, communities, neighborhoods, which do a certain business. This is where our ability to lend and therefore collect is a lot more than some of the localities. So I think we are not there yet, but we are trying to build a more of a neighborhood locality granular view rather than just take a blanket PIN code like a sort of a red, green, yellow or a red, black kind of view there. When we look at segments, see merchants, these are resellers, retailers. Now they can be any segments. Obviously there's certain categories like liquor and all, where either you won't lend or you'll be careful while lending to certain retailer there. But pretty much most other segments where it's established what is the merchant category, what is the end use, I think you can lend to. Not sure whether it answers the real estate question.
Yeah. You had a question? Yeah, please. We can hear you. Just if you can be a little loud.
So the question is around first. Thank you so much for the insightful session. I'm Manshu. The first question is around that to Suchir. So Suchir, can you do one thing? I know that you cannot share some sort of data and all, but can you share us with us that if that location is serviceable or not through an API? That's it. So we just send you the coordinates, and then if you can just say that yes or no. The second question to all the panelists is that we have talked about the whole collection process here, which is kind of digital, where the first we are using the digital footprint of the customer, and then obviously we can play with certain behavioral aspects with the customer and try to make him pay the debt. And third form of thing that we have not touched yet is the DSA, involvement of DSAs and how the DSA management softwares are being used right now to make sure that the process is being efficient throughout. So yeah, any points over that will be great. Thank you so much.
Sure. To answer your point, Himanshu, see, honestly, AWS, think of us as an infrastructure company, right? We cannot give you any data insights or any data analytics as such because we don't have this data. Like I said, AWS does not sit on any data. All the data is with us, but we are just as blind to it as you are, right? So I think Anant would be the right person to develop such kind of location-based insights.
We wanted to be a bureau, not an infrastructure company.
Yeah, but whatever you do, just do it on AWS.
But you're not letting me do it. No, you're saying privacy is an issue. You're not letting us use the digital footprint that our citizens are generating. And during COVID, it wasn't, let's say, lenders, it wasn't a happy time for lenders where they had, 50, 60, 70% of their portfolio, of course, outstanding 30 plus and no way to actually reach out to the borrowers as well. I mean, and with this moratorium also in place. So that was a hard time. You'd say that, borrowers are entitled to their privacy. But I think the counter view there is that, for businesses to run, to continue to run, we need some way to in an anonymized way or, keeping the privacy of the borrowers intact, we need to be able to access some of this information. so that the business can run profitably. Because what ends up happening in a lending business is, the delinquents make the good borrowers pay for their delinquency. In due course, the lending rates increase, and those rates have to be borne by the good customers also, right? So to make the lending more equitable, we need access to all of this data.
Sandeep, you want to answer the DSA point and how do we involve DSAs in the collections?
So I think your question is right, and which is why I want to go back to what I was talking about, is that now at least some of the large banks we work with are opening up to this idea that you need to involve the entity which knows the customer, and can you actually leverage the relationship that exists to be able to do on a debt collection side. It's of course not hard debt collection, we are talking about the soft debt collection and the nudges. At the end of the day, it's also about the cost, right? What is the incremental? Today, collection is all about cost, right? All of us know that. It's somebody, we were talking about in-house versus outsourcing, right? It's all about cost at the end of the day. So I also feel that there is an opportunity, to actually create a collections bureau. Okay, we have a credit bureau in the place, which is primary for sourcing. But what about collections bureau? Today, and this is a slightly controversial topic, but in the sense that if a customer is genuinely going through stress and the customer actually has 4 trade lines, with 4 different lenders, can that data be captured right at DPD, at 0, at 1? Okay, today that data comes on credit bureaus after 60 days, and that you start picking it up very differently. So, especially in areas which are outside the metros or tier 2, tier 1, tier 2 cities, is there an opportunity for us to look at a collections bureau where there is a common infrastructure in place, which has more access to data, which has more information about the customer, where the early trends can get captured, and that could actually benefit, the common lenders across. So I think the thought is there in that direction. The $1 million question is that who's going to take the initiative and how does it really start working?
We are all looking at AWS.
Add to that, we have just launched a
I
product.
hope I answered your question in at least some format.
Yeah, thank you so much.
Yeah. So AWS does have a product for that. That's called AWS Clean Rooms. So in which what you can do, you can anonymize the PII information of a person, and you're still able to get the information out. Let's say, is Suchir a defaulter? You can ping, and you'll get the information out of that. So
I think everyone is already sold on AWS. That's it.
Okay, we have got time for one last question.
Thank you.
Anything else?
By the way, just one
Please.
point to Sandeep's point. I think fully agreed. Just like there is today talk about transaction-based underwriting or transactional data-based underwriting, apart from purely bureau-based underwriting, the collections also need to be powered by transaction data. So transaction-based collections is something that we need. And I think this is an outstanding request generally also, that bureaus be made real time rather than have this lag of 60 days. I think that would also be a game changer.
Yeah, last question, please.
Hi. So we talked about end use control, and we talked about sort of transaction-based collection, right? So I think what we're hinting towards is maybe an escrow account, that kind of a thing, or a pooled account, right? But with the DLG guidelines and the entire escrow mechanism being called into question, right? How does that play out, right? I know a lot of lenders, including myself, we are sort of navigating the gray waters, but what does the broader panel think about escrow-based collections and, again, payment aggregators being allowed to use, EDI through that, right? So just want to ask the broader panel.
I think the intent of the RBI was very clear, that you need to, if the money is coming out from the lender, the customer needs to know which account it's coming out of, right? So the answers has probably nothing to do with collections and repayment of the loan per se. I think if you're a lender, you're an NBFC, you should be able to open your own account. It's different to what, for example, BharatPe does, where they have actually collecting and have a payment or a QR code that's actually facilitating the collection. So I think the intent of the DLG is not so much to reduce collections in any sort of manner by removing escrow accounts and pooled accounts, but to create visibility for the borrower as to who the actual financer is, which had become a little muddy in the last couple of years. Any last point on that?
Absolutely right. So, when it comes to a collection ecosystem, on the RBI guidelines on PGs and all are pretty clear only, and it's supportive, so it's nothing negative on that. Talking about the collection, I think that the misconception that is arising is, there is a closed loop system, okay, where you can do a transaction-based collection like a BharatPe. So, the money is flowing on that railroad. In that money, while you are throwing the money out, you can also be picking the money in on the same railroad. So you have a continuous control on the channel, and that's what you are doing. So it's a closed loop system. Okay. What most of the lender or 95-99% of the loan are as a non-closed loop. So a bank manages the same in a current account, in a CCOD kind of a facility. Okay, it's a similar kind of a facility. But the moment you are doing an open-ended lending, okay, and what boils down, what we earlier said, is about this 3 or 4% of the people. These 3-4% of the people could be about an intent, or it could be because of the inability. Inability again could be a temporary inability. What you need to have is a better and better communication mode with the customer. It is not to do with a physical or with a this thing. It's not about a hard bucket, soft bucket. I mean, the higher DPD does not happen by the agency. The higher DPD happens by the in-house agency only, in-house people only, because the agencies, you know, they work on a mode of efficiency. कि किसमें कितना effort लगता है उसमें काम करेंगे. So higher bucket always happen. That means it is about continuous engagement with the customer, its repercussions, how you can restructure, what parts you can waive, what all you can do within the family or a different income stream. So the core is engagement, and that is where I said that what a digital or the fintech environment is doing, it's creating more and more touch point with the customer. Okay, whether it's a social ecosystem, whether it's a personal ecosystem, whether it's a WhatsApp communication, whether it's a mail communication, each of it is about a communication. Collection is not about a physical presence.
Sure. So maybe we'll end it with one quick rapid fire. Which bank or NBFC, according to each of you all, has the best collections shop?
NBFC, of course, we.
Good answer. Sabya, who do you all respect within the ecosystem for their collection abilities?
I think, see, we work with a lot of smaller ones, but if I had to take larger ones, someone like a Bajaj and all, I think they have a very well-oiled engine, not just collection, but even otherwise.
Suchir, what's your view on the growth of fintech and lending and collections? Where do you see this play out in the next year or two?
So I think, you know, this year we are expecting at least a 30% growth in the fintech in terms of lending, in terms of collections.
Great. Anant, what do you think is the best kind of collection shop in the country today? You see a lot of lenders.
Yeah, I think I'd agree with Sabya here. You know, hands down, it looks like Bajaj. And I'm sure many of the audience would also agree. But I think as time passes, there is room for people or more lenders to actually trump these existing systems, because just technology is evolving just so fast, and collections or the overall system of collections is up for overhauling.
Sandeep, your view?
Difficult question to answer when we work with 30 of them, but yeah, Bajaj certainly. But apart from that, I think within banks, I'll also say that how HDFC Bank have changed over the last period of 2 years, specifically after COVID. I think that's phenomenal. There's a bunch of things that they're doing, and we're part of a couple of things that they're doing.
Hopefully next time we do this panel, somebody will say a fintech is up there. All right, thank you everyone. Thank you panelists for a great discussion, and some of us will be around to answer more questions. Thanks.